What's going on, everybody? Welcome back to my channel. So I just want to say I'm very sorry for not being around for the last week or so. I had a family emergency and I was celebrating the year of my mum passing on Saturday. So for me personally, it's been a very emotional week. Psychologically, I wasn't able to focus on my trading as much as I wanted to. Neither did I have the time or energy to really be focusing on doing YouTube videos and content for Instagram and that for you guys. But I am back now, feeling much better. So I hope you guys are going to enjoy the weekly Forex outlook and reviews. And we're going to go over a few pairs, slightly different format. I really want to be able to help you as much as I can grow as a trader. So in doing so, I'm going to break down a few things in a simpler form as opposed to just rushing through the reviews. So we're going to go through, I believe, 12 pairs today, and you'll see the pairs that we'll go through shortly. But the first we're going to look at, as always, is the dollar index on the 4H time frame. So when we're looking at this chart, as you can see, I have a black box with a slight grey fade in the background. This is what I want to refer to as like a brick wall. Then we have our green boxes, and this is going to be our target areas. So when looking at the dollar index, first and foremost, we can see here this red line. Let's point that out. The red line is going to indicate break of structures. So potential reversals in the market that are about to form either next week or have already started to develop. So that's the simple approach we're going to be using for these analysis. So as you can see here, we do have this red line in place indicating a downtrend in the market, and we finally had a break of that downtrend. Now, there was a significant level in the market where price was respecting for a very long period of time. As you can see, I don't really like to scrunch my screen up and go too far back to the left, but what I will do from now on is point out some key areas so that helps you in an easier way to understand what I'm talking about. So you can see here price was respecting this level for a very long period of time. It was bouncing off of this level, and as I call it, a brick wall, and was failing to break below. Eventually, we came back to this level in the past. We sat at this level for about 12 hours. And then eventually, we had this continued momentum move to the downside, this bearish momentum move to the downside. Once we was below this brick wall, this strong key level in the market, we saw price came back to retest, and we've had this continuation. Now, in terms of entering these trades, managing these trades, etc., that's down to your strategy. But these are the key levels that I've identified on the dollar index. Once we had that retest, we had a break of previous structures making lower lows. Now, once price made that lower low, we expect it to pull back to some of these key levels for double tops or potential lower highs. As you can see here, we've had the lower high in respects to the trend line. And as you can see, price failed to make that lower low. So that being said, price came straight back up, violated that structure. And the minute it violated that structure, it came back to this key level here that we have in green. We respected this level for about 8 hours, and then eventually the bulls came back in and took this market over. Now, with the gap up, or the gap that we see here right now, price wasn't able to break the structure immediately. So this was a sign that we potentially could be looking for more sells on this market structure. Even though we've broken this trend line, we can see that this was the key level we were looking at for this period. We had that respect, and then eventually price smashed straight through it. So what's my bias on the dollar index? Well, as of next week, I can see dollar strength forming, and I'm looking for buys on dollar index, or at least an indicator on the other pairs for dollar to be strong. So what's my plan? Well, I have a key level drawn here in this market as a potential target area if price is to pull back to this key level and respects it. If we start to see signs of bullish pressure with wick rejection, strong candles, we can look, if we're going down to our lower time frames, to take trades from here back up to this key level as a target, or at least a management level. And if we don't want to use this level, then what we can be doing is just using this structure right here. Now, the reason why I've chose this and not the high is because this is an area in the market where price found support previously. Price wasn't able to break below it for a very long period of time. So more of a consolidation area. If you look at it moving sideways, we could see price come back to this level before it decides to reverse again for sell bias. Now, why have I drawn this as a target level? Well, the truth is, we know this is a strong key level. If price breaks through this level and violates it, then we could be looking for some beautiful retests in and around this level here, and then see price come back to some of these structural lows as target areas or management areas on the dollar index. But as of now, the dollar index is indicating a lot of strength, meaning bullish structure, especially with this break of this trend line and how price has violated this key level. We'll be looking for some sort of retest or at least continuations back up to some of these highs. This analysis is just of my own opinion, so this does not stand as signals. Neither is it me giving you any financial advice as to what price is going to do. It's just my own opinion. So please trade carefully and do not put any mortgages on anything I'm telling you right now. Use your strategy efficiently and effectively. Next, we'll take a look at the Aussie dollar. Now, as you can see on the dollar index, we're starting to see strength, bullish structure forming, key levels being violated. What does that mean for the dollar over here against the Aussie dollar? We should see more strength. Where should the structure of this market go? To the downside. And that's what we can see. This is a very strong key level in the market where price was respecting for a very long period of time. We have price tapping here, holding above this level, holding below this level, and then eventually look what happened. Price came through and crashed through this brick wall. Once we crashed through this brick wall, price then pulled back to this level, attempted to push into this key level, and we failed on 2 occasions. 4-hour close with a wick rejection, 4-hour close with a wick rejection. So what's my plan? Well, as long as price is trading below this key level, I'm looking for sells. For my targets, I'm going to be looking to see where price is respected before as a lower high, was violated as a higher high structure, and to see if we can come back to these levels. The range from here to here is absolutely gorgeous. And if we get that evidence using our lower time frame analysis to get into some really good trades, get some sniper entries, small stop losses, big targets, even management targets, we can get back down here and see how long we can ride this trend. We have the trend line, red line here. We've had that break. We have lower highs, lower lows being formed. So let's see if we can hold this level around 65.38 and see if we can have some of this continuation to the downside. Looking for dollar strength. The next pair that we'll take a look at is British pound Canadian dollar. Now, there's 3 structures and you all must understand this. We have an uptrend, we have a downtrend, and we have a sideways moving market. When I see the market moving sideways, then what I'm waiting for is just to see price break below this structure, violate these key levels where price is holding below or holding above, and then I'll be looking for those retests, evidence and confirmation for continuations to the upside for buys, or break below for evidence and confirmation and continuations to the downside. So pound CAD, pretty boring, moving sideways, but that's how we have to analyze the market as it's part of our watch list this week. So we'll see what happens with this pair. The next pair that we'll take a look at is euro dollar. Again, dollar index indicating dollar strength, and look what we see here. Euro for the last 2 weeks or so have been pushing to the upside. Strong evidence of euro strength, and then eventually red line, trend line break, violation of this structure. Key level here is where price made the higher low. Once we start to break below these higher low structures to the downside, we're definitely indicating a potential reversal. Once we have a structural high double top, violation of structure, violation of higher lows, all the way down and making lower lows, we then are expecting the market to respect key levels, as we've seen here for the last 12 hours, or we're looking for price to pull back to make a lower high for a continuation to the downside. For now, my reference point will be this. If price trades below this brick wall that has failed to break below before and is now respecting, I will be looking to see if we can ride this market all the way back down to some of these key levels indicated by this dollar strength that we're seeing on the dollar index. If price breaks above this level, I'm not going to be scared to say that I'm going to be looking for buying opportunities, but what I will be looking for is to see how price will potentially create a lower high within this structure to see if we can have a pullback to some of these key levels here as potential retests, and then look for that continuation to the downside. So that's my viewpoint on euro dollar moving forward into next week. The next pair we'll take a look at is New Zealand dollar, Japanese yen. Again, same situation with pound CAD. 3 structures we have is an uptrend, downtrend, and a sideways moving market. Once we're moving sideways, I'm looking for price either to break the lows, retest for continuations, or break above, retest for continuations. I just need to box it off. Don't need to complicate this. Don't need to start identifying how price is breaking, making lower highs X, Y, and Z. This is the key structural low. This is a key structural high. And unless we absolutely violate them, then guess what? I'm not interested in trading it. The next pair that we'll take a look at is British pound USD. Now, as you can clearly see, we've had a lot of dollar strength for the last couple of weeks. As you can see here, the pound has had an absolute beating. So what's happened recently? Well, price has recently broken above previous structural highs. This is potentially indicating pound strength. But what we can see here as a difference in terms of structure is that once price broke above these key levels where price was respecting previously and came back to retest that level, what we expect from an uptrend is a higher high, higher low, and then after that, a retest, higher high. But look what happened. There was not enough balls in the market to push this market above this previous structural higher high to make that higher high. So now, what do we see? We see a level in the market being created where price was failing to make highs. We now see a push phase, exhaustion phase, high, low, lower high formation. Enough evidence here to create a lower high formation, and we smash back through that key level, breaking that previous structure higher low, creating that new lower low, and now look what happened. We have a violation. After the break of that structure, we've had a retest of that level on 2 occasions, 8 hours worth of information, and as we can see, we could never close back above it. So my idea for next week in terms of dollar strength, British pound, US dollar, is to see the market continuing this downtrend back down to some of these structural lows. So that's my bias on this pair moving forward to next week. The next pair that we'll take a look at is dollar yen. Now, as you can see, we're seeing a pattern now. Not sure what the yen is doing, to be honest with you. Yes, we have dollar strength being indicated in the market, and we've had a lot of dollar strength recently. But it looks like we could be topping out here, and it looks like we could be creating a distribution phase to continue down. It looks like we're creating support to continue up. And with all of that riffraff, it's not even worth our time trying to figure out what the dollar yen is going to be doing. It is best that we wait for price to break, violate structure, retest, continue up, break below, retest, and continue down, and go from there. So giving it 24 to 48 hours next week, Monday, Tuesday, latest Wednesday, going for the kill Thursday. Whatever happens, I'll be waiting patiently to see what's happening with the dollar yen. The next pair that we'll take a look at is the dollar Swiss franc. So I really had to break this down because technically this market is moving sideways, but just in a longer period of time. But we had a key level here in the market where price was respecting. Then we had a final violation of this structure. After the violation of this structure, we could be looking for sell opportunities, looking for those lower highs or retests of that level. Look what we have here. We have a retest of that level for about 8 hours worth of information with wick rejections, but it failed to continue down. We had a break above that structure, but look what's happening also. We're failing to show strong signs of bullish pressure. So my idea moving into next week is if we're going to have dollar strength, it doesn't necessarily mean that it needs to be strong against the Swiss franc, but what I need to see clearly happen is this key level either being respected for continued buys, which means I'd like to see a reaction with wick rejections, bears trying to break this structure and failing, and more wick rejections to continue identifying bullish pressure. This will be my target area if we get that evidence. If we have price smashing through this brick wall here, back to the downside, violating these structures, clearing these wick areas, then what I'll be looking for is these pullbacks, retests, and then I'll be targeting some of these structural lows. We will have to see next week how strong the Swiss franc will be versus the dollar. But for now, just be very careful. Lots of wicks, lots of sideways moving markets, but we do have a very concrete area here where price is indicating to us it was failing to break below and above previously. We do also have one here. So be mindful of any buys from this level also, unless you're able to scale down, find those really tight sniper entries with small stop losses, good targets, and use these levels as management levels. Be very careful of this pair next week. Allow it to develop into clean, concise structure and then go in for the kill. The next pair we'll take a look at is Euro New Zealand dollar. Now, the red line indicates a trend, strong bullish pressure to the upside, higher highs, higher lows, breaks of previous structure levels, beautiful retest, double bottoms, violations of structures. Have a major structural high here, and then look what happens. That retest level that price has respected previously in the past, previously broken, made double bottoms, has now been respected again, but violated on the next candle. Once we break and violate this structure, we can continue safely saying we're looking for sells. But look what's happened in the process of those selling opportunities after these retests. we've created a structural low. So another brick wall here that we'll have to face moving into next week. The ideal scenario, if we're going to continue in this break of the trend line and looking to see this market right to the downside, is a clean break of this structure in and around 78.42, looking for that break, retest, and then continuations back to the downside for some of these target areas here. If we move sideways within these two brick walls, guess what? We stay away. But if price breaks and violates this structure, then we'll have to look at this bias again next week to see how price retests this level, to see if we're going to be coming back to some of these structural highs before the market decides to make up its mind. But for now, keeping this simple, one bias. I'm more looking for sells next week than I am buys, and what I would like to see personally is a break violation of this structure, a retest for that continuation to the downside. That's my bias on Euro New Zealand dollar. The next pair that we'll take a look at is British pound, Aussie dollar. As you can clearly see, the pound has taken a beating. You can clearly see that the market of this structure is to the downside. We're clearly making lower lows, lower highs, lower lows. Now, price wasn't able to break this previously after it indicated about 12 hours worth of information of what could have been a potential lower high. In the attempt to push down, there was no real strong evidence of continued bearish pressure, and we've come back to retest this level. It makes a lot of sense because this was a previous lower high. This is where price stalled for a period of time, and look what happened. The minute price came back to tap this level, we've had a reaction, and there could have been some really good opportunities for some intraday trades or for some scalping opportunities to at least get some good entries on this area here in the market. So we've had 8 hours worth of information of bearish pressure to the downside, and at the moment, this market structure looks like it's going to do two things. Continuing this bearish trend to the downside, so we'll be using these structural lows for targets, or we could be ranging, which means we'll be bouncing off of this structural low back to the upside for a period of time. If given the opportunity, I'd like to see price pull back to some of these key levels so I can get my stop loss in a good place to then look for some sells back down to these lows. And if it doesn't come back and we have this continuation, let's say a gap in the market open, and we start riding back down to these structured levels, then what I'll be looking for is a pullback lower high within this area to then look to manage my trade once we're at this level to see if we can continue to make that lower low eventually moving forward into next week. So that's my bias on British pound, Aussie dollar. The next pair that we'll take a look at is gold. Now, as you can clearly see, gold has been pushing to the upside for some time now. But for the last week or so, we have just been moving sideways. I've highlighted a key level on this market that I want you to focus on, which is this level here. Once the market was pushing to the upside, making these higher lows, we wasn't able to break above this structure, which was indicating still bearish pressure, not trend, pressure. Then we had a massive break above that structure, and after that break, we had a rally to the upside. But what I do see now is that rally was then met with two really strong bearish candles to the downside, totally taking away this range from the bulls, and now we see bearish pressure again. Structure tells us we make highs, lower lows, lower highs, lower lows, which we can see with the structure clearly indicating potential selling opportunities. So for me next week, I'm going to be looking to see if this market can continue with this structure and look for sells. What I'm looking for is for price to pull back to this key level to see if we get a reaction as we have previously, to then look for continued sells back down to these structural levels here as my target areas. If we don't manage to come back to these levels, I want to see a break and violation of this structure. Once given evidence of that break, I'm going to be looking for price to retest these levels, looking for those candle closes, bearish candles, wick rejections, whatever you want to call them, and then I'll be scaling down to look for some selling opportunities. Target areas that I'll be looking for moving forward to next week, if we do break that structure, is these structural lows here. And once I've got the evidence, then I feel much more confident to see this trend turn from a bullish trend to a bearish trend and then look to short this market. So that's my bias on gold moving into next week. The final pair that we'll take a look at is USD CAD. Now, as you can clearly see with the structure of this market, we were in a sell-buy structure for a period of time, making structural lower lows, absolutely violating previous structure where price was respecting, violating, breaking back out of, breaking back into, retesting, making higher highs, making double bottoms, not making the new higher high, which is an indication of sell pressure, and then an absolute obliteration of this structure, straight back to the downside. We have lower highs forming double tops, but we failed to make that lower low. So now what I'm looking at, key level in the market where the lower high was formed, double top structure. We had a reaction from this level. We wasn't able to make that lower low, but we're seeing significant sell pressure here. So that means that this is a key level. And once we violate that key level, and this pair was phenomenal last week for buying opportunities, once we violate that structure, make those higher lows, we can look for those retests, and look, we see the market pushing to the upside. So we have a problem in buying at this moment in time, is that we know that this is a strong level in the market. What I'm going to need to see is how price comes back down to some of these structural lows to see if price respects these levels, and then I'll be looking to buy this market back up to this key level where I know we could face problems and are facing problems right now. And if price doesn't come back, then I'll be looking for a clean break of this structure, close above, retest, and then a continuation to some of these target highs. So that's my analysis on these pairs for this week. I hope that was useful for you. Just remember that tomorrow, the 25th of May, is a bank holiday in the UK and also a Memorial Day in the US. So it may not be the best day to trade in terms of volume. So be wary of that. Let's monitor what the market is doing next week in terms of the next 24 hours. And then let's go in for the kill Tuesday, reevaluate Wednesday, go in for the kill Thursday, and then take the day off on Friday. Wishing everybody a fantastic trading week. And as I always say, if you enjoy these videos, please smash that like button, subscribe, and until next time, take care.